Hello everyone, and welcome to this specialist trading presentation where today I'm going to be speaking about the last chance you have to become a member of our Elite Forex Trading College. I want to welcome you all for joining us today. My name is Primo. I am the president and founder of Specialist Trading. And if you're unfamiliar with our website or what we do, we are first and foremost an educational company. We are in the business of making traders consistent traders. We want to teach you how to become consistent. And that's what we're going to be doing in our Elite Trading College. Now, even though, as you saw just a few seconds ago on the slide, it's geared towards the Forex markets, all the strategies and all the techniques I'm going to be sharing in the 6-week course can easily be transferred over onto stocks, to commodity trading, as well as to intraday futures trading. I'm going to show you a lot of examples as well. So, before we begin, I have a lot of information to give you and a lot of different slides and examples. I'm also going to give you 2 of the rules to one of the strategies included in the course. Before we do all that, I'd ask that you please take a moment to view our disclaimer. We are required to show you this. I'm going to show you a lot of performance results. Once again, a lot of examples of what I'll be including in the course. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a moment just to view our disclaimer, I would also like to extend an invitation and invite each and every one of you to follow us on Twitter. There's our handle right there at SPCLSTTRADG, abbreviation for Specialist Trading. On a daily basis, I post a lot of great free information. I post current signals that our members have currently taken that were generated from our strategies, as well as anything from daily financial wisdom. So there's a lot of great information there as well. Now, if you're familiar with us, you know that we've teamed up with Pro Trader Strategies. Pro Trader Strategies markets and promotes all of my courses, all of my different techniques and methods in which to trade. They have also created a Facebook page. So if you log on there with protraderstrategies.com, you'll also see a lot more free information about myself, what we do, as well as videos that you can watch and learn for free some of the things that we will be teaching in the course. So there's lots of ways to contact us, as well as lots of ways to get information on what we do at Specialist Trading as well as Pro Trader Strategies. Now, as I stated, for those of you who may have just joined us, Specialist Trading is first and foremost an educational company. And the reason why I say this is because I used to trade on the floor of the Pacific Stock Exchange. In fact, I've been trading for 38 years, but 16 of those years I was on the trading floor, and 9 of them I was an actual specialist. A specialist is the person who makes the markets in about 50 stocks. So I've traded through all the different market environments, all the ups and downs. I traded through the crash of 1987 and then the bull market that followed. I've seen and heard and traded just about everything imaginable, so I know what works and what doesn't work. And the reason why I have such a strong stress on education in my courses is because, once again, I make no secret about this, I had a tremendous time, really a difficult time, I should say, struggling in the beginning of my career. I probably traded the way the majority of most traders trade. I would have 3 or 4 great trades, and in the 5th trade I'd give everything away. And so I followed all the courses, I went to all the seminars, I read all the books, I was doing everything that conventional wisdom told me was supposed to work, but it wasn't working over time. There was no consistency to it. And what I was doing was really overcomplicating my trading. I was really making things a little bit too difficult. My mentors saw how much I was struggling, and they took me aside, and these were actual traders that had been trading 30, 40 years already on the floor. And they changed my way of trading around simply by simplifying my trading, by letting go and releasing all the things that I had been taught were supposed to work. And once I finally let go of them, that's when my trading started to become consistent. So, because it worked so well with me, and which has sustained me and enabled me to be trading for 38 years, this is what I do in all of my courses, and this is what I'm going to be doing in the college. Teaching you to let go of what really doesn't work and hold on to what does, what has the consistency to it. And that's what we base all of our techniques, all of our methods, and all of our strategies off of. So my goal is simply not to force feed you signals and have you blindly take them without knowing why, what the reason is. My goal is to teach you how to trade. Not trade for you, but teach you how to trade with the specialist edge. This is the same edge that was able to turn my trading around nearly 40 years ago, and this is what I teach to all of my students, especially in this college that we will be starting in the next few weeks. So that's what I learned on the floor, to keep things as simple as possible. Remember, everything that I teach and everything that I promote and strategies and techniques are things that I actually learned on the floor and that I continue to use to this day. So my mentors taught me, these are the main tenets that my mentors taught me and I want to pass on to you. They said, Steve, trading should be non-subjective. Now, what does that mean? It means that two people looking at the same chart or same scenario should come up with the same setup. In other words, if you take my course and you look at one chart, regardless if it's a Forex market, currency pair, or regardless if it's an E-mini future or a stock, once you've learned and gained the information I'm going to be passing along to you, both of parties involved should come up with the same setup, the same scenario. In other words, one won't say it's a buy setup and one won't say it's a sell. That's too subjective. It's coming from two different places. You should all have the same alignment, and that's what we teach in the course. So successful trading means that you have to be non-subjective. They also taught me that successful trading should be consistent. And what does that mean? Well, we know of so many other educators or websites that promise the world. They have some magic system or strategy that generates thousands of % per month, and you'll be able to retire. We don't believe in those type of techniques or that philosophy. What we believe in is consistency, meaning that our approach, although it may hit home runs from time to time, that's not our motivation. Our approach is to hit singles. What we want to do is have a 2 steps forward, 1 step back approach, because we know that's what will sustain you. Trust me, I work with hundreds of people on the floor, and many of them became millionaires overnight by trading. And I can honestly say not one of them is still trading today because they've given it all back. So there's no consistency in some fly-by-night method that makes you tons of money but then gives it all back. There's no consistency in that. What you want to have is a nice upward slope on your P&L, and the way you get that is through education and sound fundamental techniques that have stood the test of time. That's what we're aiming for, and that's what our goal is. They also said that successful trading should be as simple as possible. Remember, once I started simplifying my trading, that's when I started to become consistent. Now, here's what I often tell my beginning students. If you look at people who have been trading for a relatively short time, anywhere from 5 to 10 years, their trading plans are extremely complicated with all these neural networks and convoluted theory and indicators that you have to come up with that are proprietary. I mean, they're too complicated. Things cannot be met until another condition is met. Whereas if you look at people who have been trading 30, 40, even 50 years down the road, their trading plans are extremely simple. Maybe 3, 4, 5 rules at top. So that's what we do at Specialist Trading. All of our trading plans are extremely simple. It doesn't matter whether you've been trading 30 years or 30 minutes. Everyone gets the same basic core to our strategies. And then lastly, and I think the most important thing, is that successful trading should make you a part of the process. Remember, I stated, I do not want to trade for you. This is not some course that we're going to be teaching where I'm going to be basically telling you what to buy and sell. I'm going to be giving you the pieces of the puzzle and being there with you every step of the way, helping you construct a plan that works for you. But ultimately, it's you who should make your own trading decisions. I think the reason why upwards of 80% of all traders fail is because basically you're relying or depending on someone or something to tell you what to do, to tell you when to buy, when to sell, to tell you what market to trade, what time frame. I mean, think of your own trading. Are you relying too heavily on a news event? Can you not jump into a market and make a decision until the news comes out? Can you not buy or sell until you see that someone in your chat room or trading room is doing the same thing? Too many traders rely on outside sources to tell them what to do. We want to put the power back in your hands, and that is what we feel is the most important aspect of successful trading. You have to make your own decisions, okay? The good news is that we give you all the tools, all the techniques, and all the pieces of the puzzle in order for you to do that. And then we're there with you every step of the way until you feel comfortable to actually do it on your own. Okay, so let's start out by going over why most traders enter a trade, and then I'm going to share with you a lot of more information, what's included in the course. Just one thing I want to touch on very quickly is that we have a lot of information. I'm going to share with you a lot of charts. I'm actually going to give you 2 of the rules to one of the strategies in the Elite Forex Trading College, But because we have so much information to give, if you have any questions, kindly wait till the end of the presentation, just in about a half an hour from now. And then we can reserve that time for questions rather than break up the presentation and slow things down. Okay? So once again, if you have any questions, kindly wait till the last 10 or 15 minutes of today's webinar. One last question I will answer. Yes, this is being recorded. That's our most popular question, is this being recorded? So if you have any technical difficulties or if you have to leave early, you can go to Pro Trader Strategies and request a link. All right, so let's look at the reasons why most traders will enter into a trade. Now, this doesn't just apply for currency pairs. You can switch here and replace it with stocks. You can replace it with futures. It doesn't matter. But whatever market you're trading is possibly too low. All right, so I'm sure you've all heard this before. Boy, the market is too low. It's never been this low before. Okay, we've never seen things come down so quickly and so fast. So it's too low, so you've got to enter. You've got to buy, right? Or perhaps it's the opposite. Perhaps whatever market you're trading is going way up too high too soon. It's way overbought, right? You got to sell because there's no way it can sustain these levels, all right? Or what about a Forex guru? Say some trading guru you have on TV or someone you subscribe to or someone in a trading room tells you that he's buying or selling or this is what you should do. Another reason is indicators. A lot of traders cannot do anything until their indicators are crossed or the indicators tell them that it's okay to enter into the market. Other traders rely on TV commentators. They can't make a decision until the TV, they wait for the TV program to come on, they watch after the market or during the market, and they want to see what these guys are buying and selling. Then lastly, probably the most common is fundamental news. So many traders cannot make a decision until the jobless claims come out or until the news comes out, some economic indicators or what's going on in the world. Okay, these are all reasons why most traders enter into a trade. Ask yourself, do you rely on these things in order to trade? Well, we want to show an older example of how well this approach works, okay, how much consistency there is to this. Here was an older news announcement in the British pound, and it said, the British pound is approaching significant resistance, okay? It's approaching a significant area of resistance between 60.50 and 61.65. The lower end of this range corresponds with the previous support resistance level visible on the daily chart, while the upper end marks the left shoulder of a head and shoulders. So they're giving you all this information. It's also a long-term bearish trend line going through. So if you listen to this, you're saying, boy, we're going to hit some type of top level. If I'm thinking about going long the British pound, I probably shouldn't. And I should probably, if I'm long already, exit or think about going short. Remember, this can transfer over, and it doesn't have to be the British pound. It could be stocks. It could be the future market. So if we look at the chart here, this is an older chart of the British pound. This is where this information obviously came out. The currency pair was going higher, but at this point, the news came out and they said, here's the major resistance, looking at higher time frames and Fibonacci numbers and all the support and resistance. So at this point, you're saying, boy, I should actually sell my position or forget about going long, all right? Because after all, these guys are well educated. They're authorities on the subject. They know better than I do. And then look what happens, okay? Remember, this is why most traders fail, in our opinion, because you're relying on an outside source to tell you what to do, when to get in, when to get out, whether to stay out, whether to go long. And as you can see, this is what usually happens. Now, the funny thing is that our strategies, two of which right here generated buy signals, the ones we're going to be teaching you in the course, would have actually had you in long the entire time within this, rather than looking for any type of resistance. So let's go over a couple of edges we're going to be talking about in the course. Edge number one, we're going to give you a simple tool that's designed to place you on the right side of the market. Now this can work in any time frame and in any direction. And one thing I left out here, it can work in any market. Now we have lots of traders who come to our colleges who actually trade other markets. And that's okay. Even if you're not a Forex trader, you can use and apply the same information we're going to be sharing with you if you are a stock trader or if you're a futures trader. So this is a tool that works in all markets, in all time frames, and in all directions. Let me show you how it works. Here's an example of the euro dollar. As you can see, we were in a pretty strong downtrend, and at this point, it looks like we've hit some type of support, so-called support, or let's say someone in your chat room tells you have to buy it there because we're bottoming out. Once again, it's gone down too quickly, too soon, and we've never been at these lows, so you got to jump in and buy, right? So you jump in and buy, and look what happens. It goes even lower, right? All right, does that look familiar to anyone? Well, with this simple edge, we would have kept you on the sell side. In other words, you could have either decided to look for a short setup, or you could have decided simply to stay out of the market. Same thing works with the upside. Here's another example in the British pound. Now, the British pound in this example had been going higher. Let's say someone in your trading room says, no, you have to sell it here. There's no reason it should be at these levels. There's some economic news that's going to be coming out, and the British pound is going to fall out of bed. So you want to jump in and sell, go short the British pound before it falls out of bed. So you jump in and short, and look what happens. Does that look familiar to anyone? With this edge that we are going to be giving you in the course, once again, you can apply this to any market and any time frame. It has extremely powerful consistency in keeping you on the right side, so you don't, get trapped into selling at the wrong time or buying at the wrong time. That's one of the edges we're going to be sharing with you. Now, edge number 2. This is a simple technique designed to fine-tune your entries, which results in high percentage trades. Now, the reason why we're presenting this edge, this was taught to me on the floor, is because many times you may have the right idea. You may be buying a market when it's the right time to buy, when it's actually in a full-fledged uptrend, and you may be selling something when it's the right time to sell. It's just your entry technique that is faulty. So this is a technique to fine-tune your entry so that it will result in a high percentage trade. Let me show you an example of what I mean here. Once again, this technique will work in any market, in any time frame. It doesn't have to be the currency pairs. Let's say you're watching an older chart here of the dollar-yen, and you've been looking at it. Say someone in your chat room says, boy, this is a good buy. We have to buy this. Now, let's say you're looking at it and you say, well, yeah, maybe we have a little double top here. If we break out above this area, I'm going to buy. So you're watching the dollar-yen, and guess what? We break out. So you decide to jump on in and you buy here on the close, because after all, we closed above this little short-term high here. And you buy, and look what happens, okay? Now, it doesn't necessarily mean that the dollar-yen wasn't a good buy. It doesn't necessarily mean that this is going much, much lower. It could mean that your entry technique is faulty. So with this technique that we teach you in the course, once again, that can be applied to any market and any time frame, you actually still would have purchased the dollar-yen, but you would not have purchased it till down here, according to the technique we share with you. And once you got in, guess what? You were right in the first place. You just got in a little bit too early. So this is the beauty of this technique that we're going to be sharing with you as well. It works in any market and any time frame. We're also going to be sharing with you a variety of both aggressive and conservative exits that can be applied to any market. Okay, let me show you an example here. This is just one of the standard type of exits that you can be using. Now, this is on the British pound. One of our strategies generated a buy signal at this point. Now, had you used the standard generic exit, you would have exited here in the next couple of weeks for a nice profit, in and out rather quickly. All right, this is where we say we give you the tools and information to decide for yourself. If you're a more moderate trader, well, you don't want to be so conservative. You think there's a lot more room to be made on the upside, so you could have used exit number 2. And if you were more aggressive, if you wanted to stay in this trade even longer, you could have used exit number 3. So there's really a lot of great information here, techniques that I've learned from trading in my 38 years that can be applied to not only the currency pair markets, but to all markets as well. And some of the best things about these techniques, as we stated, are that they work in any time frame. Now, we're also going to be sharing with you different stop placements. We know a lot of you are interested. You've always been told, well, it's all about money management. It's all about protecting myself. Well, we can't share with you exactly where these stops are because it would be giving away a lot of free information. But all we can tell you at this point is that we are going to be giving you 4 initial stop placements, and we go into all the details and explain just exactly how to implement these stops. We're also going to share with you 3 moving stop placements. So if you want to stay in a trade much longer, but you want to track it, you want to move your stop up, we're going to share with you 3 different moving stop placements so that you can have the market take you out as opposed to getting out at a specific exit point. So this is all included in the course. Once again, can be applied to any market and or time frame. Now, Let's talk about strategies, because I know that's what you're mainly interested in. You want some type of a trading plan, some type of a way to, to trade the markets. That's what most people are interested in anyway. We're going to be giving you 3 of our most consistent strategies, okay? The first one being strategy number 1. Strategy number 1 is a pullback technique. All right? We have different techniques for different markets, different time frames. Strategy number 1 works well in an uptrend. You look for a sell-off to buy at lower prices. So people who like to feel like they're getting a bargain in the price as opposed to buying at the high would be wanting to apply strategy number 1. As we see here in this example, here's a weekly chart of the dollar-yen, an older chart for educational purposes, where in an uptrend we've been going higher and then we start to sell off. Now some people at this point would probably say, well, we've topped out, we've been going up for weeks if not months, it's time to sell the dollar-yen. But according to the rules we teach you in the course, you would actually have generated a buy signal. The strategy would have generated a buy signal right here on this sell-off, and look what happened after that. The currency pair went up roughly 1,300 pips in the next 2 or 3 months. This was coming into January of 2015. So it's a great pullback strategy, meaning that if price is going up, we're waiting for a sell-off. Now, conversely, if price is going down, we're waiting not to pick a bottom. We're waiting not to look for some support. We're looking for price to rise and then go short. Now, in this chart here in the Australian dollar, we see here coming into last month, into February, it was going lower. And a lot of people thought, well, hey, maybe we stopped going down. Maybe we made some type of a double bottom here. So I'm going to jump in and buy, because after all, we've been going up higher. It looks as if it's possibly bottoming out. But according to the rules we teach you of this simple pullback strategy, the Australian dollar wasn't done yet. In fact, all it was doing was having a pullback to the upside in a down market. The strategy generated a sell signal just about 3 weeks ago, and look what happened. 200 more pips to the downside in just 2 weeks. So this is what you're going to be learning in the course. Once again, this can easily be applied to stocks and futures. How about strategy number 4? That's the next strategy we're going to be sharing with you. Strategy number 4 is probably our most popular strategy today. Why? Because it's the most consistent. It works in any market, in any time frame. We have some traders who trade it on tick charts. We have other traders who only trade it for weekly or even monthly bars. It works well in stocks. It generates literally hundreds of signals a night in stocks for all the universe of stocks. We generate signals on a nightly basis in the Forex currency pairs as well as E-mini futures. If you're an intraday trader, you're going to see a lot of strategy number 4 setups. Let me share with you a couple of the rules, okay? You may want to write these down. These are 2 of the basic rules of strategy number 4. I told you I was going to share with you 2 of the rules that we go over in the course. First of all, if we're buying, price must be above the 50-period moving average. So in other words, the close of whatever bar is dictated as our setup bar in this particular strategy, it must close above the 50. We cannot go long if the setup bar closes below the 50. So that's one of the rules. We want to be in sync with the 50-period moving average. So rule number 1 states price must close above the 50-period simple moving average. Here's rule number 2. We're going to look to buy when a price bar closes in the top 25% of its range. So that bar that closed above the 50-period moving average must also close in the top 25% of its range. If it does, then it's labeled the setup bar. That means that's the bar that you can either enter on or enter the next day. So let me just share with you what that looks like. I know some people may think this is a little confusing. In this generic example, because once again, strategy number 4 works great in any market, we are above the 50-period moving average, price is selling off, and we even closed once just barely below the 50-period moving average, but the very next bar dipped below but then closed above. So it meets all the requirements of rule number 1. We've closed above. At the second time, we want to make sure it closes in the top 25% of its range. Now, some people get confused with that. We're looking at just standard open, high, low, close bars, but even if it's a candlestick bar, it wouldn't make any difference. Or we're looking at the extreme high and the extreme low, and what we want to do is simply divide that in 4 separate parts. Okay, so this could be the bottom of the candle, the bottom wick. This could be the top of the wick. So you divide that in 4 parts, and then as you can see, these are all equal parts. The very top one is the top 25% of the top quarter. So we just want to see that we close somewhere within these brackets. Why? Because the market is giving us a clue. Most likely it's going to continue in that same direction. So remember, we're not listening to what came out in the news. We're not listening to someone in a chat room or a trading room. We're listening to the market. And the market, according to this bar, is telling us it's above the 50-period moving average, and it closed in the top 25% of its range. Therefore, it's screaming that most likely it's going to go higher. So our only job is just to jump on board. Our job is not to try and pick a top or a bottom. Our job is to discern what direction the market wants to go by listening to it. And then once we've figured out what direction it wants to go, we just jump on board. That's it. So the market in this example was saying it wants to go higher. That's our setup bar, as you see, and look what happened. So this was just an example. Let's show you something that actually did happen just a little while ago, just about 3 weeks ago in the dollar-yen. Once again, price was below the 50-period moving average, but then about 3 weeks ago we crossed above the 50-period. We started closing, and we started selling off here. All right? We're still above the 50, though. Excuse me. Now on this bar, I believe on the 17th of February, we closed in the top 25%. See, if you take the very top and the very bottom, you see we closed right in the top quarter. So this meets all the qualifications of a valid setup bar. And then look what happened. Okay? So this is how simple it is. Trading does not have to be complicated. It's only ourselves that make trading more complicated than it should be by adding all these extra things onto our plate. Chat rooms, news events, tons of indicators. With strategy number 4, this is all you're looking at. It's based off of a specific pattern. I just shared with you 2 of the rules. The remaining 3 or 4, such as exit points and stop placement and a specific pattern we're looking for, are all you need to know for this particular strategy. Now, as I stated, it's so popular because it's so consistent. It works in any market and any time frame. So as you see here on this 4-hour chart of the euro-dollar, the beauty of it is that it can be applied to any time frame. Obviously, we're in a downtrend here on the euro-dollar on a 4-hour chart, and look at all the sell signals that were generated. So if you like to intraday trade, strategy number 4 is a great strategy. It will produce a lot of signals. Now, let's go on to the next strategy, strategy number 5. Okay, strategy number 5 is not indicator-based. It's based off of a candlestick pattern. So we had strategy number 1 was a pullback technique. Strategy number 2 is a pattern recognition strategy, and strategy number 5 is based off of a candlestick technique. So it's our premier candlestick strategy that was designed specifically for the Forex markets, but it works once again in any market in any time frame. So as you see here in this chart of the Canadian dollar starting in December of last year coming into this past week, obviously we're in an uptrend. All we have to do is apply the add-on for strategy number 5 and look at all the signals that were generated to go long. This is on daily charts. The last signal generated to go long was just roughly about a week ago on the 10th. Now, remember, I can't stress enough that we have members who take my college courses that don't even trade the currency pairs. In other words, we only present these college courses maybe once every year or two. The last time we presented this was roughly about 2 years ago. And some people say, well, Steve, I love your information, your techniques, but I only trade stocks. And I tell them, it doesn't matter. All the things we teach in the courses can easily be applied to stock market. We also have some members who say, well, Steve, I only trade the futures markets and I intraday trade the E-mini. That's okay. Everything I'm going to be teaching you in this Forex course can also be applied. So we have a number of members who don't even trade Forex or who lightly dabble in it, who still trade all these other markets. So they work best with currency pairs, but you can also trade them with stocks, ETFs, futures, and commodities. In fact, let me show you some recent trades, actually. Here is a chart of crude oil with strategy number 4. So let's say you trade commodity markets, okay? We all know that crude oil has been going lower and lower. Remember, the 2 rules I shared with you is that if price is above the 50-period moving average, well, then we need to look for a buy setup. But if price is below the 50, well, then we're looking for sell setups. Well, obviously, crude oil has been below its 50-period moving average for some time now. So all we've been doing, all the commodity traders who have strategy 4, have been going short crude oil. No one has been trying to pick a bottom in crude oil. And if we simply add the add-on tool that automatically generates the signals for strategy number 4, look at the signals that were generated, going all the way back to June of 2014 to just about a month ago in February, or a little over a month ago, to go short crude oil, roughly 4 signals in the last 3 or 4 months. Now that's strategy number 4, looking at commodity markets on a daily basis. How about yesterday? Okay, here is a 30-minute chart of the E-mini. Now we have the 50-period moving average plotted. These are 30-minute bars. As you can see, nothing much was happening on this time frame coming into roughly 11 o'clock Pacific time. We were basically going sideways to lower, bouncing above, below the 50-period moving average. So someone would say, well, there's no clear-cut range or idea of what to do. In fact, a lot of people, once again, who rely on the news would say, Steve, you know, the Fed's going to make an announcement about interest rates. This was yesterday. I don't do anything until the announcement comes out. Okay? Well, once again, we do not rely on an outside source to tell us what to do. We only listen to the market. Now, prior to the announcement, what did we see here? We see a bar that closes above the 50-period moving average and in the top 25% of its range. Now, all the other rules, which I haven't shared with you, generated a buy signal. This was roughly 11 o'clock Pacific time. So had you taken that setup on the E-mini, guess what? You would have had a 40-point gain in just a little over an hour, just about an hour. Okay, that transfers onto roughly 2,000 points per, or I should say $2,000 per contract. Now, we're not saying everyone would have held on that long, but just showing you the power of these strategies can work in the futures markets, they can work in commodities, as well as the currency market. So you don't have to be a Forex trader, or a 100% Forex trader, to enroll into our college. Now, along with the strategies, along with the edges, along with all the tips, we also give you 2 extra bonuses. These are things that I was introduced to while I was trading on the floor of the stock exchange, and these things have tremendously helped me with my trading, and I'm going to be sharing them with you only in our courses. The first one is the ATM, that's Advanced Trade Management, and the next is the PET-D, probably our most popular trend tool. So let's first start with ATM. Once again, that stands for Advanced Trade Management. And by the way, we only share the ATM technique in our college. We don't have a course, a specific course for this. We don't give this out, you know, just for someone who wants to purchase this technique. This is such a valuable technique. Why? Because it can keep you out of bad situations so well with its advanced trade management. In fact, here's an example of our strategies when things are working, when the markets are working well, and when our strategies are in sync. This is a perfect scenario. As you can see here, this is when everything works. When you get sell signals, they work perfectly, and then even when you get a buy signal, everything works. But we all know that it's not, you know, realistic for this to happen all the time. Many times you will get in markets where you'll see this. It's so rangy. This is usually in the summer months, and nothing is happening. The minute you get a buy signal, you're stopped out. The minute you get a sell signal, you're stopped out. So you go in and out of these whipsaw conditions. This is what everyone is trying to stay away from, no matter what type of trader you are, no matter what market, doesn't matter what style or technique you have. Everyone doesn't want to get involved in some type of a whipsaw market. What the ATM technique does, it's a specific formula that keeps you out of a good portion of these. So it actually tells you when not to trade, because most likely we're going to be entering into this type of a phase of a market. So you can either stay on the sidelines or trade another technique that is not deemed by the ATM to be in some type of whipsaw market. So it's a great, great tool. Once again, this is something we share with you, the formula. We only teach this in the college course. Now the second bonus we're giving you is our PET-D, and this is the Primo Early Trend Detector. This, again, was a technique that was taught to me on the floor of the stock exchange. Unfortunately, when I was introduced to this over 30 years ago, we had to figure this calculation out by hand, and so we could only apply it to daily charts. It's not a very difficult calculation, but it was something that you couldn't apply to a 5-minute chart, because by the time you finish the calculation, the 5 minutes would have ended, and then you would have had to calculate the other 5 minutes. So we only were able to use this on daily bars. But with high-speed computers and programmers, we have been able to develop this now into a color bar algorithm. So we're keeping this a proprietary color bar algorithm for all of you to use and to apply onto any market and any time frame. Let me show you how it works. When you see a series of green bars, once you've applied the PET-D, it's telling you that you are in a short-term uptrend. So whereas when price is above or below the 50-period moving average, that's telling you the overall trend. But what the PET-D does is fine-tunes the trend, and it tells you if the majority of bars are green, the short-term trend is up, and if the majority of bars are red, the short-term trend is down. It's that simple. So now you really have the confidence to know that you are on the right side of the market and the short-term trend is in your favor. It's like having the wind at your back, and you have this nice feeling of knowing that you're not swimming upstream, the current is at your back, you're swimming with the current behind you. As you see here, the beauty of the PET-D is that it tells you which direction you should be trading. And once you know that, you can apply any strategy, whether it's one of the ones we teach you in the course or something you're currently using, to that direction. So looking back here at the Canadian dollar, as it was going up, I mean, many people were saying, well, you know, where do I get out of this? How long is it going to go up? As long as the bars are green, it's in an uptrend. You just wait till you see a series of red bars. Same thing happened with the euro dollar. Coming into the end of last year, the euro dollar was going straight down. The only people that lost trading the euro dollar were people trying to pick a bottom. But if the bars were red, there's no reason you would try and pick a bottom because it's telling you the trend is down. You're not going to swim upstream once you trade with the PET-D. You're going to be in sync with the flow. So that's the beauty of the PET-D. The entire time, all of our members who had the PET-D were in sync by just simply looking for shorting opportunities in the euro dollar. Another thing you can do is apply this to longer term time frames. As I stated, all of our techniques and all of our methods not only work for currency pairs, they work for all markets. Here's a monthly chart of the S&P index. All right, this is going back 20 years, back to 1995. We see all the peaks and valleys, all the tops before the crashes. It would have been nice to know in your portfolio, in your IRAs, or in any type of long-term investment, when it was good to get out. You'd miss all these downward crashes, and then you could get back in. Well, all you would have had to done was apply the PET-D, and once you see a majority of green bars, you're in the market. Once you see that you have 2 or 3 bars of another color, well, then you can either get out, or if you're more aggressive, you can go short. This is a current chart, so it's basically telling us that we're still long on a monthly time frame, a long-term time frame, the markets, because we remain green. Until we see 2 or 3 red bars, using this technique, you're still going to be long-term, long the markets. So let's go over the curriculum. This is a 6-week course. The first week we go over more in detail the foundation and building blocks of Forex trading. Now, you know, you got some of that today where we shared our concepts. We talked about how we don't rely on outside sources. I go in much more detail about that. That is a video that we give to you so that you can study all of our philosophy and our concepts on your own. So week number 1 is actually a video course that you can study at your own leisure. We start the live courses with week 2. That's where we spend a good time teaching you all the rules with Forex strategy number 1. Remember, that's the pullback strategy. So week 2 is where we talk about strategy number 1. And you're going to be learning how to do that. You're also going to be getting homework assignments so that I make sure that you fully understand how to implement these techniques. Remember, you are going to be making the decisions in your trading, not an outside source, not someone on TV telling you what to do, or not someone just saying, buy here, sell here. We want you to be in charge of your own decisions. The next week in our live courses will be strategy number 4. Remember, this is our most consistent strategy. It works in every market and every time frame. I showed you crude oil and the E-mini, how well it worked in the E-mini yesterday. So you don't have to be a currency pair trader to take advantage of strategy number 4. It's our pattern recognition strategy. Week number 4 in the live courses is strategy number 5. That's the one based off of candlestick patterns. So we're just looking at a specific candlestick that will generate these nice up and down signals in the markets. The next week is week 5, where we go over the entire time just applying the PET-D. I want you to fully understand how to apply and use the PET-D with your trading. You can not only use it as a trend identifier, but you can also use it as a confirmation tool. So in other words, if you get a buy signal, if the bar is red, don't take the trade. Remember, you want to be in sync with an uptrend, but if the bar is green, well, then it's okay to take. Remember, this can work in any strategy and in any market. We have dozens of traders who apply the PET D to stocks and have done fantastically. We also have others who apply it to the Forex markets. And then the last week of our live course is week 6. That's where I go over ATM, Advanced Trade Management, a powerful, powerful technique that has literally saved me thousands of dollars by keeping me out of the market when we go into these whipsaw conditions. And then we're also going to put it all together. So any major questions you may have about the entire curriculum and what we've gone over in the 6 weeks, we can go over and then in a live class ask questions and answer things together. Okay? Now remember, once these have concluded, you don't have to worry. It's not as if your communication with me has ended. You're always a student of mine. You can always email me whenever you like. This is not something where after 6 weeks you're on your own. I'm going to be there with you every step of the way. Now, one other thing that you have with the course is that for learning tools, we give you email alerts. That means when any of the strategies generate a signal, you will be issued an email alert just so that you understand that a signal has been generated and you can check your work. This is just as a guidance tool, as an educational tool, so that you know what to look for. As we see here on the 3rd, we issued out an email to all of our students who trade strategy number 5, okay? And this was a buy signal, a short signal in the euro-yen. So on the 3rd, the euro-yen generated a sell signal using strategy number 5. This is the email you would have received. Now, if we look at the euro-yen, we see here that someone just off face value would say, well, there's really no clear direction in this. We're kind of going sideways. We're in a whipsaw market, up and down, up and down, up and down. So most people would have stayed out of the euro-yen, but not according to what we teach you in the course, because according to strategy number 5, a sell signal was generated on the 3rd. So if you had not yet learned the full rules of how to really spot one, you would have been issued an email alert so you could check your work and go back and research and study why a signal had actually been generated. And as we see here, from this actual signal that was generated with strategy 5, you could have gained 600 pips in just 1 week. You see how the euro-yen fell out of bed after that signal was generated. Now, we get lots of testimonials from lots of our clients that have been in our colleges or who just have taken our individual courses, anywhere from people saying that they've had the 8th profitable trade in a row. We have people in Texas. We have people all over the world that take our trading courses. I just want to share one with you from a gentleman who emailed us recently. He said, Stephen, I have been day trading the Forex for some time. I was hanging in there with good money management, but not really making money. And I'm sure that sounds familiar to a lot of you. Since discovering you and using strategy number 4, I've locked in 873 pips and have 5 open trades sitting at 631 pips all in the market. I missed a few. I only have to review the charts twice a day, which allow more trades and at lower risk than daily. Plus, I get to golf and read more. What can I say but thank you for the education. Looking great for the future. This was from JK. This was from a student from our past college who had been struggling for years, had learned all the things in the conventional courses, but just couldn't make any money. Once again, this is the same thing I went through some 38 years ago when I first started. I taught him the same things that my mentors taught me, and now he's on the road to consistency. Okay? So that's what we're trying to instill in all of our members, not some fly-by-night system that generates thousands and thousands of dollars per day. We don't promise that, and we don't believe in that. What we're trying to instill in you is consistency so that you can get back on track to 2 steps forward, 1 step back type of trading. And I'm glad here that he said thank you for the education, as you see on the bottom, because that's what we provide people with. We provide you with education, and then we help you mold it to meet your needs. So, in closing, before we go to any type of question and answers, let's just recap what we're talking about today and what is actually included in our course. Remember, here's what you're going to receive in the Elite Forex Trading College. 6 full weeks of trading tools and techniques. 3 proprietary Forex strategies, but once again, they can be transferred onto any market in any time frame. So it doesn't have to be just applied to the Forex markets. As I showed you in the examples, they work in any market. We're going to share with you exact stop placements, exact exit and profit targets. So don't worry, this is not something where you're just going to have to guess where to get in and where to get out. We're going to share with you all of the exact places that you can take advantage of. and then you can decide for yourself which one you want to take. We also provide that educational signal service. That's where the emails come out. This is a signal service for educational purposes so that you can check your work. In all the techniques and strategies we share with you, we go over conservative and aggressive versions, so you can decide how you want to trade. We also give you bonuses, the ATM and the PET-D. These are two great techniques that were introduced to me on the floor of the stock exchange that have really turned my trading around. And then lastly, I think something that you can't get from any other trading course is 38 years of trading experience. I'm taking everything that I've accumulated in my 38 years and sharing it with you. There's nothing I'm holding back. Any question you may have, anything that you may want to apply, I share with you all of my expertise and everything I've gone through in 38 years. I've seen and traded just about everything you can imagine out there, so I know what works with consistency and what doesn't. So you're going to be getting 38 years of trading experience included with all the information that we're giving you. Now, in closing, remember, once again, this is what my mentors taught me, and this is what we teach you in the courses. Trading should not be or should be non-subjective. Successful trading should be non-subjective. At the end of this course, you will be looking at a chart and you will know exactly if you should be buying or selling, at what price, where you're going to be getting in, where you're going to be getting out. Successful trading should be consistent. What we're going to be teaching you are consistent strategies and techniques that have stood the test of time. These are the same things that I use in my trading that have been able to sustain me for over 30 years. Trading should be as simple as possible. As I stated, most of our strategies and techniques have 5, maybe 6 rules tops. Most of them have less than 2 indicators. Most just have 1 indicator. And they're indicators you can get off any charting software package. They're not things that you have to come up with and devise a specific formula. We provide you with all of that. And then lastly, successful trading should make you a part of the process. That's really our goal in this college. We want to make you a part of the process. We give you all the tools, all the techniques, all the pieces of the puzzle, but ultimately, when you've absorbed it all and you've really learned everything like the back of your hand, you're going to feel confident for the first time in making your own decision. You won't have to say, well, I can't do anything until those earnings reports come out because I don't know which way the market's going to go. You'll know in advance what your position is going to be, where you'll be getting in, where you'll be getting stop placement, and where your exit will be. You won't have to go to a trading room or a chat room to tell you what to do or listen to some trading guru on TV. You'll know exactly, regardless of what market, if you're trading E-minis, if you trade Forex currency pairs, or if you trade stocks. All this is what we're going to be sharing and giving you in the college. Now, here's once again what you receive in our college. You're going to be getting instant access because the first week is a video, and we're going to be starting these courses actually in the next week or so. Okay, so we'll be having live courses starting very soon. So if you want to take advantage, you have to sign up now. Now, we normally, because of all the information provided as well as the 38-year experience involved in this, we normally sell this college package for close to $4,000. But we're dropping the price down in the last time just to get you involved in our course for $34.95, and included we are offering payment plans. So we realize that may be a large sum for many of you to come up with in one payment. Don't worry, we have payment plans where you can put a small deposit and still be in the course. You can still be in the college. So this is a great opportunity to learn all this information, 3 proprietary strategies, 6 weeks of detailed instructions, entries, exit stops, all the advanced trade management rules, as well as the PET-D tool that will automatically color your bars green and red, email alerts, signal alerts, full access, and access to my email address for $34.95. Okay, this is a great deal. Here's how to take advantage of it. And once again, Pro Trader Strategies is our sister site. They market and promote all of my courses. You can contact any of the trading consultants there by emailing them at trading@ProTraderStrategies. You can put together a payment plan just in a few moments from now. Or you can call them directly at area code 310-598-6677. Now, if you want to take advantage of this deep discount for a limited time, you can go straight to the sign-up page. That's the link below at the very bottom there. And if you look in your chat box in the far right, you'll see that the link is already posted there. So all you have to do is click that on, and it will actually take you to the sign-up page. So I'm going to leave all this information up. Remember, take advantage of this very quickly, but I'm going to also open up our question and answer box. So if any of you had any questions, I will be able to answer them right now. Dinesh asks, can you show the ES future chart with your system? Well, I'm sorry, Dinesh, I don't want to backtrack, and I have roughly over about 120 slides, so I don't know exactly where that was. All I can say is that I'm not sure which chart you were thinking of, but when we were looking at one of the E-mini signals, that was yesterday. Roughly at 11 o'clock, strategy number 4 generated a buy signal. So if that's the one you're referring to, you can check out your chart, and strategy number 4 generated a great buy signal, and it's up to you whether you wanted to stay in for the entire 40 points. You could have gotten in and out very quickly, but it just shows you the validity of our strategies and how well they work in any market as well as any time frame. Let's see. Mole is saying, thank you for the presentation, a nice one. You're more than welcome. Peter has a question. What strategy works best for ETFs? Do you provide a scanner to locate trade? Well, let me answer the first one. They all work well with ETFs. We have traders who have taken our college course, once again, a year or so ago, that apply them to ETFs only. In fact, they're just ETF traders. We actually have hedge fund traders who have taken our college who just apply them to ETFs. So we have our strategies, the strategies we're going to be presenting in the course are traded in over 80 countries around the world, from people who have just started trading, who are just independent traders, to actual hedge fund traders. And everyone gets the same basic format. So we have, as I stated, people who are trading these strategies in any market. So there's no best. It's all, once again, what you're looking for. If you're looking to trade them to get in and out quickly, well, we teach you how to do that. If you're looking to hold on for long-term, type of profits and gains, we teach you how to do that as well. Ultimately, it's going to be you who decides what market or what time frame it works best for by applying the techniques. Because some traders swear by it that they only use it on tick charts. Others trade it and say, no, I use it on ETFs and on daily bars. There's no right or wrong answer. The only one is what works best for you. Okay. Do you provide a scanner to locate trades? Peter, I believe the charting software packages mostly have the scanner process available. You can just plug in the variables and you'll be able to scan what you want. Shouldn't be very difficult. For more information on that, I would probably contact the people at Pro Trader Strategies. They can help you with that. It all kind of depends on which platform you're using. Next question you had is, what trading platform do you support? Well, remember, once again, all of these strategies, it doesn't matter. Most of these strategies you can use on any platform because you're going to be able to identify them right off the bat. But in order to apply the add-ons, which are the PET-D, which colors the bars green and red, as well as have the up and down arrows as learning tools, they can be applied to Metastock, NinjaTrader, TradeStation, MT4, and with a few alterations, Thinkorswim. You have to go through NinjaTrader, but you can, if you're a Thinkorswim user, you can also use it. Okay. Yes. So you have Thinkorswim. Yes, you'll be able to apply any of those. We have, but once again, there's a few edits you have to make. I believe you have to go through NinjaTrader, but once again, call up the people or talk to the people at Pro Trader Strategies. They can help you set that up. Next question, what are the class dates, also time of day? Well, we are figuring on actually starting the class dates in just about a week from now on the Friday the 27th, which is just a week from tomorrow. We're looking at right after the close, just the same time period this presentation was given. So we're looking at Fridays because remember, we have people who have already purchased the college who are waiting for it to begin. And that's why we labeled this your last chance to get in, because we're starting most likely next week. We're not going to give any more discounts or deals or payment plans on this. And we're trying to make a time that fits everyone. We have people trading this in all over the world, so we can't just say, every day at a certain time. So we're trying to pick something that works best for everyone. And so far, what we've been able to come up with is Friday afternoons after the close works well for everyone. But please remember, all of the live sessions will be recorded. So if you can only make one or two and then sometimes you can't, don't worry. You are always provided a video of the live class that we had, so you can study at your own leisure. Plus, you can always contact me whenever you'd like as well. Punil asks, when we get an alert for number 4, do we wait for the next bar to trade higher or lower? Well, that's one of the entry techniques. That's what we teach in the course, Punil. You can decide to trade it more aggressively and just get in, or you can wait. And we go over this in the course. But as I stated, if we say that these are the same rules that have to be applied every time, well, that's a systematic approach, and we don't trade systems. We want to give you all the pieces of the puzzle and then have you decide how you're going to enter, have you decide how you're going to exit. In fact, a perfect example, the other day we had 2 traders who trade strategy number 1, and both had profitable trades. One made more than the other. They still had great profits, but one made more than the other. How did they do that? Because we're trading strategies. Strategies give you the benefit to determine if you want to enter at a different price, if you want to exit at a different price, if you want to use a different stop placement. That's the beauty of it. So each one was consistent in their trading. They just had different results, and that's the way trading should be. You should never trade the exact same way as someone else. That's a recipe for disaster. That's why we believe most traders fail, is because you go to a chat room or a trading room or see someone on TV and you say this is what they tell you what to do, where to buy, where to sell, and it doesn't meet your needs. Maybe it's too fast for you. Maybe it's too aggressive. Maybe it's not conservative enough or too conservative. So we want to give you the pieces of the puzzle and then help you design it so that you feel comfortable. We feel that only traders that feel comfortable trading the method will ultimately be consistent. Okay? Denise asks also, do you have to pay after 1 year on the PET-D software? No, Denise. After 1 year, there's no difference. In other words, that may be something we go in the future, which is another reason why to take advantage of all this. But for right now, no. Once you purchase this course, all the strategies as well as the PET-D add-ons, they're yours for life. There's not something that's going to dissolve. The only thing that will end after 1 year is the email alerts. But trust me, you won't even need them. You'll know so well how to spot these. You don't need us to email you and tell you when a signal has been generated. You'll know exactly when one has been generated. Okay? Next question, do we get updates when they appear free? Well, yes, for that year, you will be getting updates on daily bars. So whenever a signal has been generated, you will be getting an email update. You will also be getting, you have the add-on, the automatic add-ons will update and show you the up and down arrows. Also the PET-D, and that is not something that will conclude after a year. Those are yours for life. The only thing that will conclude is the email service, which once again, you won't really have to rely on, trust me. Most people who have been taking our courses aren't at all even concerned with the email anymore. In terms of the software is yours. The software is yours. It's not something that's going to conclude, okay? It's just the email service, okay? So the PET-D and the software is yours for life. And in addition to that, your correspondence with me is yours for life as well. So this is not something where I say you have to contact me because after 3 weeks, that's it. No, you can contact me. I have members who have been members of mine for 5 or 6 years that still send me emails. Okay, so it doesn't matter. Every once in a while they want to ask a question. They said, what do you think about this? Or would this be in sync with the rules if I'll alter this with one indicator? And then I give them my feedback. So you can always stay in contact with me. The add-ons and the software is yours for life. It's just the email service which will end. Okay. Remember, this is 38 years. These strategies and techniques I've accumulated in 38 years from trading. I know many of you have been trading for a good amount of time, but possibly not 38 years, maybe only a few years, maybe possibly only a few weeks. If you want to shorten your learning curve, if you want to learn how to trade from someone who's been in the business for that long, this is, that's priceless to get this information. Most people learn from people who have been trading 5, 10 years in a relatively short time. Someone who's been trading this long and who is still in the markets, this is where you want to be getting your information from. This is someone who you want to help you construct your trading plan. This, once again, is what we will do in the course. The beauty of the course is you don't have to be a currency pair trader in order to take it. If you trade stocks or futures markets or commodities, you can just as easily take the same courses and apply them to those markets, okay? All right, in closing, remember, this is a great deal. We usually advertise this for close to $4,000. We've discounted it down to $34.95. As well, we've included payment plans. But this is your last chance. We are starting the live classes next week, and if you want to take advantage of that, plus the payment plans, you have to sign up within the next day or so. So here's the information needed in order to do that. Contact Pro Trader Strategies. You can see the email address there, or call them up directly at the number. Or if you're ready to take that deep discount and just come on board, just go to the link in the chat box and you will be able to automatically be at the sign-up page, and you will be up and running and on our list and ready to take the live class, okay? I want to thank you so much for attending today. Thank you so much for listening to all the information. And please, if you really want to take your trading to the next level, join me in the Elite Trading course, which starts next week. I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. We'll see you next time. Bye-bye.